G'day folks, welcome back to Pete's Investing. It's the 21st of May 2024. This is the SP500 update with the NASDAQ, the Japanese Nikkei and the GermanDax. We also cover the VIX, and you can see there they're all gone up slightly since our last video, with the exception of the GermanDax gone sideways and the VIX has dropped. On our heat map, you can see there we've got various instruments we cover, and today we're looking at the world markets on the bottom left there. Now on the monthly, on the CCI 150 trends, they're still predominantly bullish. There's a bit of a mixed bag there on the weekly, and predominantly bullish as well on the daily, with the exception of the VIX and GermanDax are bearish at the moment. In terms of the three-step process to trade, I'll cover these in the charts as we go along. But basically, you trade in the direction of the higher time frame. So for example, if you're trading on the daily time frame, trade in the direction of when the weekly is trending, or if you're trading on the intraday, like the 1 hour, the 15 minute, 4 hour, etc., then you should be trading on the minimum on the daily trend. Don't go against the trend. Step 2, trade on the direction of the CCI 150 and look for a fresh breakout from the CCI moving averages. That's where you enter your trade, and you close your trade. Step 3, when the CCI 150 enters into the CCI 150 moving averages. And again, I'll go through the example of how to read these on the charts. So first, looking at the VIX, you can see there the monthly, the weekly and the daily. There is no CCI trend on the monthly. However, you can see there just by eyeballing it, it's probably a bearish signal. On the weekly, that's also bearish. The CCI is broken below the moving average. And on the daily, it's been bearish now for most of May as well, with a bit of an uptick, but still bearish. Just be careful of it breaking up into that moving average band. If we jump to the daily and the hourly, on the VIX, you can see there we only trade in the direction of the daily, in this case, if you're trading on the hourly. And here we've got a bullish divergence. So again, if I was going to draw you can see there's higher lows versus lower lows on the price. That's a bullish divergence. So we may see it bounce from there, and the minimum bounce will be somewhere in the vicinity of a 23-38% Fibonacci range, assuming it bounces from this point on. You can see there it's actually just touched that 23% level. Again, I don't trade these retraces, although you can if you're really clever. But you've got to be very quick. Sometimes they just do that. They really just make a small move. And in this case, it actually penetrated that 23% level. That's the minimum touch point, and most of the time, 90% of the time, they hit that minimum level. Sometimes they go a lot further, even beyond the 100% level. And I'll take that Fibonacci back to the recent high, in this case, before that divergence started. So that's the VIX. Going to the US market, the SP 500. You can see here on the monthly, we're bullish. The CCI is trending above the moving average band. Although do note we've got a bearish divergence, lower highs on the CCI versus higher highs on the price. That's a bearish, bearish divergence on the monthly. On the weekly, we did have this long-term double top on the CCI versus higher highs on the price. That's also considered a bearish divergence on the weekly. Now it's made a new high there since the last few weeks. And on the daily as well, we've got a bearish divergence, bearish movement, lower highs on the CCI versus higher highs on the price. Now, so long as that, let's draw that. If I zoom in, you can see there from that, it's higher highs versus slightly lower highs on the CCI. That's a bearish divergence on the daily. Now, if we go to the daily and hourly chart, and again, depending on what time frame you're trading, and assuming we're trading on the intraday here, the 1 hour, you only go long because the daily is bullish. It's trending above the moving average band. So during this period, you only go long. So back here, you could have taken long trades, for example, when the CCI breaks above the moving average band there. You would have taken that long trade, and you would have gotten out of the trade at that point there when it hit that moving average band. So you would have made that nice little few pips there. Enter another long trade there, breaks above the moving average band, and you would have exited the trade when it touched that moving average band on the CCI. So somewhere along that peak, you would have got out of the trade. And now in this case, the price has kept going up. Notice there's a bearish divergence on the CCI, lower highs versus higher highs on the price. You can still keep trading this going long, but again, be very, very careful, because at this point, even though that has broken higher, the CCI is dropping off. So you can do one of two things: either don't trade these divergences, don't trade long when these are showing a bearish divergence, or you can trade when the CCI still breaks above the moving average band there, for example. Go, if I zoom in, go long on that one, because the CCI is broken above there, and you would have made it maybe out a couple of points there. You can see you would have closed it out there, gone long again there. You can see there it's getting a bit weaker now. It's hitting this resistance at 53.26, and it's actually coming back quite quickly. It's not as relaxed as this little rise back here. So you'll notice there when it's in the same direction as the daily going long, it's actually got a lot more movement to the upside. Once you hit this, especially when you get a bearish divergence, you get a lot less movement to the upside. So again, always be careful about these bearish divergences. I don't trade them. I use them as a early warning signal, and probably avoid trading would be probably wise. But you can still trade them. But again, sometimes they move well. Sometimes, in this case, the combination of the resistance as well as the CCI declining is giving you a weak signal to go long. Next, look at the GermanDax. Now on the monthly, we've still got a bearish divergence here, and it's getting new highs on the price. So again, be careful about going long too aggressively. Although I wouldn't go short yet, that's still giving us a bullish signal on the monthly. On the weekly, we had a couple of divergences here, with the first one here broke down, hit our target, and the second one here is still playing out. That's still almost a double top. That high there on the CCI is still lower than that high. We're getting new highs on the price, so it's still a bullish movement, although it's a bearish divergence. And on the daily, you can see there, if I zoom in, between bearish divergence there versus high highs on the price, and it's hit this resistance similar to the US market, and it's actually come back down and hitting this diagonal ascending trend line. Now if I jump to the daily and the hourly charts, assuming you're trading on the hourly, again take note of the bearish divergence on the daily, but you can still, now in this case we've got a bearish signal. The CCI is broken down below the moving average. We don't take long trades. You could probably start taking short trades from here, and you can see there, that point there, that would have been somewhere around there. You would have started taking those short trades there, that little trade there. Now in this case it broke up, and you probably would have broke it and got out with a break even at that point. So at this point, it's a fresh breakout to the downside, and although the price chart is still showing above the moving average bands, you can wait for this to break down like it did back here before taking short trades on the hourly. But again, you can actually get in a bit early, assuming, and some of these can work out quite nicely if you time it right. In this case, at that point with a fresh breakout, you would have probably had a break even in this period. So again, early days. But notice it's actually breaking above the moving average band here, even though the CCI is declining, moving in line with the price. There is a bullish divergence here, by the way. Higher lows. Actually, no, I'm sorry, that's not a divergence. I'll remove that. Higher lows there and higher lows there. So you've got to be careful how you read these. So there's no divergence currently. The CCI is moving in line with the price, and it's actually bouncing off this diagonal ascending trend line. So at the moment, going short only, according to the daily trend at the moment. Next, we look at the Japanese Nikkei. On the monthly, it's bullish, above the CCI band. On the weekly, it's bearish. You can see there it's broken below the moving average band. Also, we've got this bearish divergence. Lower highs versus higher highs on the price. Now, I have set this target area on the weekly between the 23 and the 38%. Hasn't actually hit that target area yet, so we'll keep an eye on it, but at the moment, early days. Sometimes they do fail, but again, a lot of the times they work, but I'll keep an eye on it. It's a long-term divergence on the weekly. On the daily, we did have this bearish divergence versus higher highs on the price. It actually came down, hit our target area, and making a bit of a retrace to the upside after hitting the 38% level almost perfectly, and then bouncing up from there. Although notice the CCI still dropping off, although starting to flatten out a bit, so we could see some further upside in the short term on the daily. So considering that on the daily, let's jump to the daily and hourly charts. If you're trading the hourly, again going long only during this period, so that would have started back around this area here. So you would have taken some long trades during this period because that's trending long on the daily. So you would have taken those long trades. It broke above on the moving average band there and closed it out on that one. So you would have had a few little pips there. Broke out again there on that bar, that little bar there, and closed it out on that. Actually, you would have closed it out on up there somewhere because that touched the moving average band. And then it fell down below that moving average band on the CCI as well as the price. Now notice here the CCI and the price moving average bands are declining until this point, and you probably would have, if you want to be really cautious, only go long when the moving average bands on the price are moving up, same as the moving average bands on the CCI. In other words, when they're both increasing, like they are here, they're a safer area to go long. Notice here the price moving averages are declining and the CCI moving averages are increasing. That's a bit of a risky trade. You can see there the price is pretty much moving sideways, if not slightly to the downside. And then here it broke up again. You can see there that both the CCI and the moving average bands on the price accelerated to the upside after that big bullish candle. You would have made a couple of points there possibly before getting out there, depending on where you got in on that candle, and then a few more. Then you would have avoided that little trade possibly, depending on which one you're using, the EMA 9 or the CCI. And then it fell off on both of them and it started declining. So again, very cautiously going long on the daily on the Nikkei. Lastly, the NASDAQ. On the monthly, we're bullish. We're above the CCI moving average band. And we've also got a bearish divergence on the CCI versus higher highs on the price, and I've drawn a target area. On the weekly, that's neutral. It's actually in the moving average band there after being bearish for a number of weeks. And we've also got a bearish divergence on the weekly, and I've drawn a target area there. Not quite near it yet, so again, got some way to go on that one. And on the daily, we've got a bearish movement, I should say, on the CCI. We've got a bit of a retrace to the upside on the daily. After we had a bearish divergence, you can see there lower highs on the CCI versus higher highs on the price. Came down, hit our target area, the 23.38% level. This one would have got down probably near the 50% retrace before making a bounce further to the upside. And currently resting on this resistance at 18,672. Again, if we go to the daily and the hourly chart, again, going long only during this period, although just be careful, we've hit this resistance. You can see they've got a double top almost on the hourly chart. And we've also got a bearish divergence on the CCI versus higher highs on the price. And I would consider that extended to that level there if you want to be really pedantic, because that's pretty much the same area as that. So it's still a bearish divergence. Now it's actually hit the target area with that wick, but it still may retrace to the downside, so just be careful. You can see there it's respecting that resistance at 18,672. So you might see further downside, so just be careful. Again, only trade primarily when the moving averages of the price as well as the moving averages of the CCI are bullish and going long in accordance with the daily trend. To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.